Что illa ma alperta. Isne ismjaște făia stusta. Isne iskeala sozos nadas. Isne iskeala sdomar.
What's up, YouTube? Welcome back to CFX. And in this video, I want to discuss the basics of Forex, how to count pips, how to know how much you need to risk when you're funding up your account, depending on how much you fund it with, and things along with the basics such as that. So let's go ahead and hop right into the video. So in this video, like I said, we're going to go over what are lots, what are pips, understanding lot size categories, risk and reward, and account size management. So let's first start off with, what is a lot size? So a lot size is the amount of money that you put into the market and the amount of money you're also willing to risk. So we have three main lot sizes. You have a micro, a mini, and a standard. So with a micro lot size, a 0.01 represents 10 cents, a 0.02 represents 20 cents, a 0.03 represents 30 cents. So you're basically putting 10 cents into the market with a micro lot size. So a mini lot size represent $1 in the market. So a 0.1 equals $1, a 0.2 equals $2, and a 0.3 equals $3. In a standard lot size, you're putting $10 into the market. So a 1.0 equals $10, a 2.0 equals $20, and a 3.0 equals $30. So basically what you're doing is you're moving the decimal place over to the right one time, and that will equal your lot size. But just remember there's an imaginary zero once you move the decimal place over to the right one. So right here, this is how you can basically translate it into money, and we're going to go deeper into it on the next slide. But let's just say you're in for a trade and you collect 190 pips. Well, then remember, the micro represents 10 cents per pip, the mini represents $1 per pip, and the standard lot size represents $10 per pip. So if you collect 190 pips with a 0.01 or a micro lot size, you will have $19. With a mini lot size, you will collect $190. And then with a standard lot size, you will collect $1,900. So when you're looking at a pip, or when you're looking at, say, really any pair, honestly, whether it's indices, regular Forex pairs, crypto, you will have a base, a pip, and a pipette. And basically how I have it organized on this chart here, that is how you will be able to divide it up. And it does vary because not all currencies, or not all prices will look like that in the market. So it does vary, and it does change on how you will split the base from the pip and then the pipette. So now let's move on to what are pips. Pips, also known as points and percentage, and it is the unity of measure that expresses change and value between two currencies. And it's also a unit of measure on whether the market is going up or down. So when you're trading Forex, you have basically three different ranges or three different functions. So you have an entry point, or EP, and then you have the stop loss, or in other words, SL, and then you have take profit, TP. So whenever you hear those things, that is what they are talking about. Your entry point is where you will hop into the trade, and then your stop loss will be the maximum loss that you can take in a trade, and it will automatically pull you out once the trade hits stop loss with your losses. And then your take profit is your maximum gain in a trade. So it will automatically take you out once your trade hits TP as well, with your max profits that you collected from that trade. So for example, let's go over USD CAD, and let's say we're in USD CAD for a sale. So our entry point is 1.3342. That is our entry point. and we're going to set our stop loss at 1.3357. Since we are in for a sell, our stop loss will be above our entry point. And if you're in for a buy, then your stop loss will be below your entry point. So your TP is going to be 1.3304 for this trade. So now let's get into the formulas of how you will calculate your risk and reward. So to calculate your risk, you will subtract your entry point from your stop loss. And then to calculate your reward, you will subtract your take profit from your entry point. So let's say our risk, as we said before, is 1.3342. So we will subtract that from our entry point, giving us, our stop loss, giving us 1.3357. So 57 minus 42 will be 15. So in total, we're only risking 15 pips in that trade. Now, let's calculate our TP. So that will be 1.3304 minus 1.3342. And that will be a total of 38 pips. So we are risking 15 pips to collect 38 pips overall. So hopefully that makes sense for you guys. And now we're about to translate this into monetary gains. So how are you able to translate this into money? And really all you have to do is multiply your lot size by the total of pips. So let's say we entered a trade with a 0.06 lot size and we're collecting 10 pips, or we're risking 10 pips. So 0.06 times 10, that will be $6 in a trade that you are risking or collecting. Let's say 0.23, a mini lot size, times 25. So we entered a trade with a 0.23 lot size and let's say we're trying to gain 25 pips. So 0.23 times 25, that will be a total of $57.50. So same thing with a standard lot size. Let's say we enter the trade with a 1.12 and we're trying to collect 15 pips. We're gonna have a total of $168 in that trade. So that is how you calculate your monetary gains from a certain trade, by multiplying your lot size times your pips. So now let's get into the risk management part. So a lot of traders like to risk a max of 10% in a trade. And the reason that is because if you lose more than 10% of your account, it's going to be harder to gain that money back over time. So like, let's say you let's say you lose 30% of your account. It's going to take a lot longer to regain that money back, let's say the proper way, by using proper risk management and just collecting it over time, little by little. Whereas if you risk 10%, you could possibly gain that back just the next day. So 10% is what I hear a lot of people say they will risk. Majority of the time, it's like the max risk for a lot of traders. And a lot of traders do not try to lose 10% of their portfolio throughout a whole year. So let's say your account size is $100. Then 10% of $100 is $10. So 10% of $10 is $1. So that means your max lot size that you were able to pop will be a 0.10 in a trade. Now, another way that you can look at this is, let's say you have $100, so your max lot size that you could pop is a 0.10, but you want to hop into multiple trades. Well, then you could easily divide that up. Let's say you're looking to hop in 5 trades. So that means you will pop a 0.02 for each of those trades. So you will pop a 0.02 for each of those 5 trades, equaling up to a 0.10 lot size. So you're in 5 trades and you're still using proper risk management by using your whole lot size. So that is how you would divide that up whenever you're hopping in multiple trades. So now let's say you have an account size of $350. 10% of that is $35, and then 10% of $35 is $3.50. So that means your max lot size that you could pop is a 0.35. And the same way with that, you could split that up as well. Let's say you have an account size of $500. So 10% of 500 is $50. 10% of 50 is 5. And then the max lot size you could pop for a $500 account is a 0.50. Now, to get into a standard lot size, you will need $1,000 in your account. So 10% of $1,000 is $100. 10% of $100 is $10. So that means the max lot size that you could pop is a standard lot size, a 1.0. So with all these, you can always split them up how you see fit. Let's say you have a trade that you feel has a better setup than another trade, then you can put most of your profits into that one. Let's go back to the $100. So let's say you see a better setup on Euro GBP, but you also want to hop in USD JPY. But like I said, you like to set up on Euro GBP. So those are the only two trades that you plan on hopping on. So therefore, you could put a point. Let's say you could pop a 0.07 in Euro GBP and pop a 0.03 in USD JPY. Guess what? You're still using proper risk management by splitting those two trades up on which one you favor the most and you plan on collecting the most profits from. And therefore, you're still using proper risk management. So, hope you guys enjoyed that. That will be the end of the PowerPoint. And if you guys liked it, please leave a like, comment, and also subscribe to the account because we're going to have a lot more knowledge coming out soon. Now let's go ahead and get you to your bag. Hope you guys enjoyed the video, and I'll see you in the next one. I'm out.